Hi, I'm Ifti, and welcome to the CLiK Trading Education Weekly Market Roundup for the week ending 31st October 2025. As October closed, markets delivered a mixed finish. Wall Street hovered near record highs, small caps slipped, and commodities softened. Rate cuts may have arrived, but central banks are far from celebrating, and traders are recalibrating expectations heading into November. US equities ended the month broadly flat. The S&P 500 edged lower by 0.1%, the Dow was essentially unchanged, and the Nasdaq gained 1% thanks to big tech resilience. The Russell fell over 2% as smaller companies lagged. In the UK, the FTSE added 0.7%, supported by retail and energy strength. According to Reuters and the Financial Times, the Federal Reserve's 25 basis point cut met expectations, but Chair Powell's data-dependent message cooled hopes of a longer easing cycle. After 3 weeks of gains, gold pulled back 2.6% as Asian buyers turned sellers and the stronger dollar weighed. Silver managed a modest 0.4% rise. Crude oil dipped 1.3% following an OPEC survey that pointed to ample supply and sluggish demand, offsetting geopolitical risk premiums. The US dollar index gained 0.35% as traders priced in fewer rate cuts. The euro softened after the ECB held rates steady. The pound fell 1.3% ahead of the Bank of England meeting, and the yen weakened 0.8% after the BOJ maintained ultra-easy policy. The Canadian dollar steadied as the BOC cut rates but struck a relatively hawkish tone. Digital assets closed October under pressure. Bitcoin slipped 2.8% but held above 110k. Ethereum fell 8% and Solana dropped over 8% amid lower institutional inflows and end-of-month profit-taking. According to Bloomberg, crypto volatility faded as traders rotated back into traditional markets. The week's main themes: the Fed's hawkish cut supported the dollar and cap metals. The ECB pause reinforced wait-and-see sentiment. The BOJ's dovish stance pushed the yen to fresh lows. Oil supply overhang muted prices despite tension. And FTSE resilience continued thanks to energy and retail strength. Looking ahead, 5 key events for traders. OPEC meeting on Sunday. Any quota change could move crude. Fed communications and speeches. Tone will drive yields and the dollar, ECB and BOC follow-ups. Markets will test policy divergence. Big tech earnings from Apple, AMD and Meta, and UK and Eurozone PMIs, vital for gauging growth momentum. Markets love clarity, and right now there's not much of it. With central banks diverging and volatility compressing, traders should focus on process over prediction. Structure your plan size correctly and let price confirm direction, not headlines. Heading into November, review your risk exposure, track dollar correlations with golden yields and be patient around key levels. S&P support 6,800, resistance 6,950, gold 3,950 to 4,120, and Bitcoin 105k to 116k. Remember, follow the flow, not the FOMO. Thanks for watching the CLiK Trading Education Weekly Market Roundup. For full analysis, courses and community access, visit cliktradingeducation.com. Stay sharp, stay educated, and trade the right way.